Hey, this is Mike Swanson here. I want to talk with you today about the key support levels to watch for gold now and the overall stock market, because we're in a bear market when it comes to the stock market, and that's now impacting the price of gold. Gold in the first quarter this year had a tremendous rally. It went up almost to 2100, but then it peaked out and it's been falling with the stock market since that spring peak, and it's now on a critical long-term support level. This is the area of its lower 200-day Bollinger Band. That's the pink line on the chart. It actually closed right on it Friday. And the blue line that you see, which is around 1680, and we closed right on it too. Well, what that line represents is the 1/3 retracement level of the bottom in 2016, the last bottom in gold in a, when you look at the cyclical trend or even the secular trend, it's a 10-year critical long-term bottom, and the high set last year, it almost touched basically this year. So that's the 1/3 retracement level. And below that, you're looking at support at around 1555 to 1566, the 50% retracement point of those two levels. Now, the bad news, and I have good news about gold in a moment, but the bad news is I gotta tell you, I think we're going to break that 1/3 retracement level. I mean, we're just right on it. So I would not be shocked if gold isn't going to fall to that 50% retracement level. And if things get, if the sell off in the stock market really intensifies, we could go down all the way to around 1450, which would be the 2/3 retracement level. It's a possibility. But here's one good thing about gold, and that's this chart here, which is the gold divided by the S&P 500 ratio. It's a relative strength ratio. And what it measures is how the price of gold is performing compared to the stock market. When the ratio goes down, it means gold is lagging. When the ratio goes up, it means gold is outperforming. Well, that ratio is up this year. And perhaps more important, the ratio is doing okay in the past couple weeks, even though gold has had some big down days, and we saw a couple last week for sure. Despite that, when you compare the action in gold with the S&P 500, gold is still doing better. Even in the past couple of weeks, it's still doing better. And I think that's going to continue to be the story going forward. And that bodes well for gold in the future, in the coming years. Even if gold goes down, it's likely to fall less than the stock market. Now, the picture with the stock market, I find really troubling. And I showed this chart in the video I did last week. I think it was on Thursday. Look, the stock market's in a bear market, and it's locked in this downtrend that I've drawn the lines on the chart. It's a downtrend channel. And I talked in the last video of why I think the bear market's probably not going to end till next year. Why? Well, that's likely when this cycle of rising interest rates is going to reach an end. That's what the Fed Fund futures market is suggesting. And some other indicators I follow suggest that we're going to have a recessionary trough in a slowdown, not a depression, not an economic collapse, but we're in a slowdown in the economy. And the trough of that slowdown is likely going to be in the second half of next year, probably the fourth quarter. And when you have that happen in the economy, historically the stock market will fall into it and bottom roughly 90 days ahead of the trough in the recession or the slowdown. And again, that's why I've got this circle on the chart of when I think the slowdown will end. And if I draw the downtrend line, you can see that that circle puts the market, bottoming out somewhere between 3,200 and 30 below 3,500. 3,200 is the 2/3 retracement level of the 2020 low in the last high set around New Year's. 50% retracement is around 3,500, 3,511. So that, to me, that's where we're headed to when it comes to stock market. Now, gold, since it's outperforming the stock market, it could easily, I think it will, bottom before the bottom in the stock market happens. So we could see gold bottom this December, maybe in January, ahead of a stock market bottom in the spring. So that's another reason to think I don't think gold's, even if it trends down and gets to that 50% or 2/3 retracement level, once it does bottom, I think it's going to be set up to outperform in the market, to continue to not just simply outperform the market on the downside, but to do very well in the years to come. But that's looking ahead. And now, as I said at the very beginning of this level, we're looking to see how gold deals with these various support levels. And we're now on that first major support level, closed right below it or right on it, the 1/3 retracement level. I mean, another way you could say this is, look, the bottom last week is not much different from the low of last year, set in the first quarter in July. We basically, you call that the low now, the low of last year. If we break that, if gold closes below, say, 1,650, we're breaking support. This 1/3 retracements level that's coinciding with the lows of last year, it's broken, and I think we got to expect it's going to challenge that 1,550 area, and that's what we're looking at next. But don't get too bearish on gold because it's outperforming the S&P 500, and that's a great sign. And when you look at the gold stocks, even though they are down, they're not crashing. They're not trading like they did in 2012 or during that time. So I want to share with you my thoughts on gold, and we'll see how things play out for the stock market and everything else in this coming week. And now I got to end the video. Look, before I do that though, if you are new to my YouTube videos, you need to hit the subscribe button, and then you need to hit the bell next to it, and then YouTube will send you an alert as soon as my next video is up and for you to watch it.